In this video, we're going to talk about closing costs. What are closing costs? How much are closing costs? Who pays closing costs? I'm going to try to give you some basic information that will hopefully be helpful to you. Now, when you buy a home, I'm sure you're aware that you're going to need some cash up front, generally in the form of a down payment. Now, there are a number of programs where you can have low down payment. There are a few programs that have no down payment requirements, and sometimes you may be using a down payment assistance program to pair up with one of the other one of the low down payment programs that you can use to cover the down payment. But in addition to the down payment, there are other costs associated with buying a home and getting a mortgage, and that's the closing costs. That's what we're going to talk about today. Mortgage lending is, in comparison to other forms of lending, is really unique in that it takes a few weeks to get from application to closing. And a lot of that is because there are some things, in this case, the collateral is a piece of property. It's a piece of real estate. So there are some things that need to be done in order to vet this property. From your standpoint, you want to make sure that the property is in the condition you presume it to be in. You want to make sure it's worth how much you think it's worth. And from a lender standpoint, those same things are come into play there, as well as the lender wants to make sure that the property is marketable and make sure that there is a clear title on this property. And so that's what we're going to talk about with the closing costs. Now, let me just run down. I'm going to talk about kind of what the categories of closing costs are. We'll talk about some amounts. We'll talk about who pays them. So let me run down, first of all, just a listing of what you might look to see as far as closing costs. Now, when you apply with your lender and you find a property, they're going to give you what's called an official loan estimate, which will be their best guess as far as what closing costs might look like. So here's some things you might see on your loan estimate. First of all, an origination fee or some type of lender fee. So you might see an origination fee, you might see application fee, you might see an underwriting fee, you might see all three of those from your lender. What this is the lender is collecting some funds up front in order to defray their upfront cost of getting this loan from application to closing. Like we talked about just a minute ago, it is a process that takes several weeks. And from a lending standpoint, there are many people involved in this process. It's not something that comes together in a couple of hours. You can have a lot of people that have a lot of hours worth of work in this. And that's what the lender is charging you for with the origination fee up front. There's an appraisal fee. Well, let me back up just a second. You may also see discount points. I've got a separate video on the discount points, so go check that out if you want to know more about discount points. But typically discount points are optional, and this would be a percentage of the loan amount. Discount points are simply means that you're paying some extra finance charge or interest at the time of closing in order to get a lower rate over the life of the loan. And like I say, in most cases, this is optional. So you may or may not see discount points on there. Next up, we have an appraisal fee. The lender is going to hire a state licensed appraiser to give that person's opinion of the value of the property you're buying. And so that ensures from a lending standpoint that the lender is not over lending on the value of this property. From your standpoint, it ensures that you are not overpaying for this property. You may see a small fee for a credit report, a flood certification fee. This involves the lender employing a third-party company to look at the flood maps and make sure that the property you're buying is not in a flood zone, or if it is in a flood zone, which flood zones is it in? Because if it is in a flood zone, then you're going to need flood insurance. You're going to have to buy flood insurance for that. In North Carolina, when you do a real estate transaction, an attorney has to do the closing. So you would have an attorney's fee for that. And then there's title insurance, which the attorney will obtain title insurance for both the lender and the buyer. That's you. Let me talk about this for just a second. When you get a mortgage, there has to be a lender's title insurance policy. And what this is an insurance policy. You pay the premium one time at closing. This protects the lender from any defects in that title or from any future claims against the title to this property. There's also an owner's policy, which is not required from the loan standpoint, but which the attorney will offer to you cost is minimal, and you definitely would want that protection. But same thing, it's going to protect you in case of title matters that might come up down the road. And then finally, when you buy a home, the deed's got to be put into your name, or there has to be a new deed conveyed to you as the new owner. That will be recorded with the Register of Deeds in the county in which the property is located. Same on the mortgage. The mortgage has to be recorded with the municipality, and they will charge a fee for that as well. You may see a couple of other fees, but those are the main ones, or some of these may be renamed to something else. So these are the main closing costs. Now, let me say also, the next category is your prepaid items. So these are things that are not really fees, but it's stuff you have to do when you're buying a home. For instance, homeowner's insurance. When you buy a home, you have to buy a homeowner's or a hazard insurance policy. And that policy has to be paid up for the first year. So you have to go ahead and pay for the first year at the time of closing. That would be included in there as well. Next up, property taxes. The property you're buying is going to have property taxes on there, which will be prorated between you and the seller, depending on how long each of you has owned it or will own it during the year. The attorney will do the proration and everything, but that will need to be taken care of at closing. And then for your escrow account, you're going to put some money in there to cover next year's property tax and homeowner's insurance. Not the full amount, but just you're going to need to make a deposit to get that account started, so that there will be enough in there next year. And then you may also, depending on what day of the month you close on, there will be some interest from that day of closing until the end of the month, because you're not going to make a mortgage payment the month after you close. So that's all the stuff, or mostly all the stuff, that is required for a mortgage loan. Now, a couple other things that you may choose to do on your end are extra inspections on the property. A home inspection, a termite inspection. If the house has a well or septic tank, you may choose to have inspections on those. Now, depending on what type of loan program you use, if it's one of the government programs and the property you're buying has well, septic, you may be required to get inspections on those. You may be required to get a termite inspection as well. So just know, when I talk about numbers in just a second, that does not include any of those extra inspections that could be required on a government loan, or that you may choose to do on your own. Let me also say, if you're using some of the other programs, like the down payment assistance programs, there are extra fees associated with that as well. Okay, hope that makes sense. Now, as far as amounts go, like the scenario I'm looking at right here, this is a $170,000 purchase. It's a 3% down payment. And the actual closing costs turned out to be around $3,700. The prepaid items were another, $1,900, something like that. So all told, in this case, your closing costs would probably be somewhere between, $5,500 and $6,000 to cover everything. That's not counting the extra inspections that I mentioned a minute ago. Okay. Lastly, who pays for the closing costs? Well, it depends. It depends a lot on what you negotiate with your seller, or what your real estate agent negotiates with the seller. The closing costs can be paid by you, the buyer. They can be paid by the seller. They can be paid by some combination of you and the seller. If you're getting a down payment assistance program and you have money left over from, your down payment assistance more than covers your down payment, some of that money could be used to pay closing costs. One thing to keep in mind is that all of the agencies involved, when we talk about mortgages, all the agencies have rules around how much the seller is allowed to pay of your closing costs. Now, I have a separate video about that as well, but just as a for instance, if you are doing a conventional loan with a minimal down payment, let's say a 3% down payment, the seller is not allowed to pay more than 3% of the purchase price toward your closing costs. So, let's go back to our earlier example. If it's a $150,000 purchase, the seller's paying 3%, that's $4,500. That's going to cover most of your closing costs, but it's not going to cover everything. So just know that there are rules around how much the seller is allowed to pay. So I hope this gives you some information about closing costs, what it is, how it works, who can pay it. But if you'd like more information, if you have specific questions, or you'd like to look at a specific scenario and just see how much cash do I need if I'm going to pay the down payment and the closing costs, feel free to reach out to me. I'll be glad to put it together for you. I can do a nice analysis, and that way you can see all the numbers. Okay, hope this is helpful to you. Thanks for watching, and we'll see you soon.